Ladies and gentlemen, good day and welcome to the Patel Integrated Logistics Limited Q2FY26 earnings conference call. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. This conference may contain forward-looking statements about the company which are based on the belief, opinions, and expectation of the company as on the date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Harshil Shah. Thank you and over to you, sir.
Thank you, Ishan. Good morning and very warm welcome to everyone. Thank you for being on the call of Patel Integrated Limited. We are happy to have the management with us here today for a Q&A session with the investment community. The management is represented by Mr. Mahesh Bhogda, the Executive Director, and Mr. Avinash Paul Raj, the Company Secretary. Before we start the Q&A session, we'll have some opening remarks from the management. I'll now hand over the call to Mr. Mahesh Bhogda for the opening comments. Over to you, sir.
Yeah. Thank you. Thank you and good morning, everyone. It is a pleasure to welcome you all to the earnings conference call for the second quarter and the first half of the financial year 2026. Let me first thank our host, Phillip Capital, for graciously hosting the Concall. Now, let me take you through the operational highlights for the period under review, followed by the financial performance figures. The overall business environment remained somewhat mixed during the quarter, with global uncertainty and fluctuation in air freight demand in certain sectors. However, we continue to stay focused on our core strategy of operational excellence, network optimization, and the cost efficiency. This disciplined approach helps us deliver another quarter of consistent and healthy performance. We are also encouraged by the ongoing infrastructure development within India's logistic ecosystem. Like upcoming Navi Mumbai International Airport, expected to commence operation soon, will include a dedicated cargo terminal with an initial handling capacity of around 0.5 million tons. 0.5 million tons. It's scalable to about 3.25 million tons in later phases. We are very optimistic that once it becomes operational, it will significantly enhance Western India's cargo connectivity, and given our strong base in Mumbai and nearby regions, it will naturally complement our network and will help us in a favorable way to enhance our performance financially as well. Further, as we know, there is another airport in Jewar Airport in Noida also coming soon, which will have initial capacity of 0.25 million metric tons. So both this landmark airport of Navi Mumbai and Jewar Airport in Noida will have definitely help us in enhancing our capacity as well and increasing our volume. During the quarter ended, as we can see, demand remains stable across our key customer segments, particularly from e-commerce, pharmaceuticals, and manufacturing, which continue to drive a steady cargo movement across our network. in Q2 FY26, we handled a total cargo volume of 15,393 tons. 15,393 tons, comprising 13,195 tons of domestic cargo and 2,198 tons of international cargo. On a quarter-on-quarter basis, Q-on-Q basis, domestic volume grew by 13%, while international volume increased by 31%. For the first half of FY26, the total cargo handled was 28,711 tons. 28,711 tons, including 24,831 tons in domestic and 3,880 tons in international segment. As a result, the blended realization per kg for the quarter is in INR 59.24. Again, for the first half at INR of 58.22, reflecting discipline, pricing, and continuous focus on value-driven customer service. These are the operational metrics which we track regularly, and we are happy to share with you. Now, let me provide some key highlights of our financial performance. During Q2 FY26, the company reported an operational income of INR 94 crore, marking a 12% year-on-year increase. Our EBITDA for the quarter stood at 3 crore, growing 14% year-on-year, with margins at 2.66, while profit after tax, PAT, each INR rupees 2 crore, an increase of 15% year-on-year, leading to an improvement in PAT margin to 2.44%. Now let me give you the half-yearly figure. For a half year, our total operational income is rupees 172 crore, an increase of 4% year-on-year. EBITDA for the half year is INR 5 crore, up 2.3% year-on-year, with margins of 2.61%, while PAT is INR 4 crore, higher by 8%, reflecting an improvement in PAT margin to 2.27%. Since we are at half year end, and let me share some balance sheet numbers as well. Our balance sheet, property, plant and equipment are 33 crore. Our capital work in progress is 5 lakh. Investment property is 13 crore. Our intangible assets are 30 crore. Our non-current investment is 2 crore 35 lakh. Let me correct myself. Intangible asset is 30 lakh, not 30 crore. Sorry. I'm really sorry for that. Now let me continue the thing. Financial assets are non-current investment of 2 crore 35 lakh. Loans are 1 crore 15 lakh. Other financial assets are 2 crore 58 lakh, giving a total non-current assets of 52 crore 65 lakh. Further, the current financial assets are current investment of 2 crore 14 lakh. Trade receivables are 71 crore 74 lakh. Cash and cash equivalent in the company is 21 crore 75 lakh. Other than above, we have in the bank also bank balance other than the cash and cash equivalent of 5 crore 34 lakh. We have other financial assets of 1 crore 45, other current assets of 16 crore 28 lakh, in rounding off to 16 crore 29 lakh, giving us the total assets of 171 crore 36 lakh. 171 crore 36 lakh. Again that the equity and other liabilities are equity share capital of 69 crore 58 lakh, other equity of 52 crore 64 lakh, that is the reserve, and further the small borrowings which we have of finance 49 lakh, other financial liability of 3 crore 74 lakh, deferred tax liability net 1 crore 92 lakh, current liabilities are borrowings are 12 crore 58 lakh, trade payables are 15 crore 7, numbers are not visible to me, must be 15 crore, I understand. Okay, and other financial liabilities are 18 lakh, other current liabilities are 18 crore 48 lakh, total current liabilities are 42 crore 98 lakh. That is our total equity and liabilities are 170 side is 171 crore 36 lakh. And since we have shared the cash flow also, just some of the figures of the cash flow I would like to share with the this audience. We have a cash flow from operating activity of 3 crore 92 lakh, and giving us the operating profit before working capital changes of 5 crore 20 lakh, operating profit before working capital changes of 5 crore 21 lakh. After the working capital adjustment, cash generated from operation is for half year is 3 crore 26 lakh. In that the taxes, if you minus, then the net cash is coming up 1 crore 47 lakh. In just to add up, we just now got also the refunds after the quarter end, refunds of 2 crore 26 lakh, which will reflect, that benefit will be reflected in the coming quarters. 2 crore 26 lakh refund we have received after the end of the quarter. And now cash flow from investing activities are purchase of fixed assets of 74 lakh, sale of fixed assets of 11 lakh, purchase of sale of net current and non-current investment of 20 lakh, movement in fixed deposits of 82 lakh, interest received of 14 lakh, in dividend received of 1 lakh, giving us an investing activity the negative 1 crore 48 lakh. Cash flow from financing activity each profit from long-term borrowing negative 37 lakh, interest paid of only 21 lakh, dividends paid to the shareholders of 2 crore 8 lakh, 2 crore, in fact rounding off to 2 crore 9 lakh. As a result, we have a net decrease in the cash and cash equivalent of minus 2 crore 32 lakh, opening balance of cash and cash equivalent of 14 crore 13 lakh, closing balance of cash and cash equivalent after netting of the borrowings and all this, we are a 11 crore 82 lakh. So we are a net debt-free company now. These are the financial numbers. Now let me switch over to technology front. We are a company which is a system-driven company, always try to add more value to the system. So as a result, our freight bill platform continue to enhance operational feasibility and customer experience. Now nearly all bookings and deliveries are now processed digitally, improving turnaround time and ensuring transparency across the supply chain. Just to add up in this, we have developed the receivable software also, which controls the receivables through the system apart from the human intervention, so human monitoring as well. So which which is in our industry very well recognized, and I think we are the first in our industry to develop a receivable control software. We are also doing the international outbound movement of goods, where British Airways is one of the major foreign airlines. For them, for first in our industry, we have directly connected with the British Airways operation in the Canada government, and as a result, we got appreciation also from British Airways that system is working very fine. What I mean by the system, it will be directly connected with the operating system of the British Airways. And since it was more about a regulatory requirement from the Canadian government, we are expecting very soon other governments and other airlines will also start the same. This will also give us a first mover advantage in this airline. We also, just to, as continuing my earlier Concall, we are now in the process of we are in the air cargo very well. We are in the process of doing the road transport also through some subsidiary, which is in the process of which is in the process only right now. Very soon I will share the things with you guys also, that development as well. And further, as we can expect that with the blessings of all of you, our and the team hard work, we have delivered a good quarter. So we also expect that looking ahead, we remain confident about maintaining this growth momentum in the second half of FY26. The festive season combined with a stable e-commerce and manufacturing demand is expected to support a strong cargo volume. With our focus on operational discipline, efficiency, and customer-centric execution, Patel Integrated Logistics Limited, your company is well positioned to build further on its leadership in the air freight logistics space. Thanks all of you for having a patient hearing from me. With this, now I open the floor for the question and answer session. Thank you once again for patient listening. Over to her.
Thank you. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jimmy Jail, an individual investor. Please go ahead.
Good morning, sir. Firstly, congratulations on a good set of numbers. I have a couple of questions. That on the Navi Mumbai airport and the other airports that we will be present in, so our offices will be present in the airport itself, right?
Yes. Thank you for asking this question. Because we are a company wherever the airports are there and having a cargo facility, by default we have to be there. So so what we do normally near to the airport, we develop our office and hub also. That's the way we are right now also in all the airports of the India. Similarly, we will have in Mumbai also our presence, and in the Jewar airport also.
Okay, sir. And sir, out of the total offices, how many are owned and how many are franchise operated?
Look, it sometimes changes the figure and all this one, but definitely we and all in the major metro cities we are owned, and wherever the far places are there, to save the overhead cost, we are in the franchising.
Okay, sir. And one question on the financial. So for Q1, we saw a flattish quarter, and now we have recovered well in Q2. But if we keep the same annual growth rate of around 15% top line, so that comes around 400 crores for FY26 end. So will we be able to achieve it in the next 2 quarters?
Look, we are in the process of growth of the turnover, and definitely. As I can tell you, normally the first quarter remain our mute only, not this time only. Normally, traditionally always remain the mute only, because from the second quarter of the financial year, momentum takes up, and it continue because now again the Christmas coming, March calendar year coming, and then the March again the festive season, and all the growth momentum. Like Indian economy is growing, we are also growing because we are one of the major player in our segment. And just to tell you about the landmark figure of what you are talking about, that will be definitely achieved. We are in the process of achieving, but I cannot give you a now definite answer that this number will be achieved or that number. But we are in the process of achieving growing the turnover definitely.
Okay, sir. Okay, sir. And one on the receivable side, sir.
Yes,
our receivables for this H1 has increased, even though we have streamlined our process through the online trade pay app.
Yeah. Look, this is actually look like closing numbers because the turnover increased now. As you can see, the turnover increased. So that the closing number sometimes get skewed, and you can see in the quarter end some numbers have increased. Okay.
Okay.
But it's not that not that the aging has increased or something like that. So we are very at the same time we are a company, as you know also earlier also you track our company. We are a conservative company, and we will definitely don't at the risk of turnover. We are ready to forgo turnover, but we don't want to reduce the quality of the data. So that's the way we do. So we are very much these data are very much in control. Nothing to worry as per our understanding.
Okay, sir. And sir, on the Pune, that 1 acre land we had bought, so are we in the process of building a warehouse there, or what is the plan for future?
No, correct. Just to update you, we were in the process of acquiring the land. I agree with you, but we have not still acquired the land till now because still some we are in the process of discussing and all this one because we want to be a ROI driven company as well. So unless until the ROI comes up as per our things and all this, we don't want to move ahead as well. We passed the resolution. I agree with you. We were in the process, but still we have not. Our cash remain in our company only.
Okay, sir. Got it, sir. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Dheeraj Kaswan from RRR Investments. Please go ahead.
Hello, sir. Thank you for giving the opportunity to ask a question. My question is that, can you provide some commentary about the warehouse that we are going to be building at the Pune land? Is there any update on that?
As I was explaining your previous questionnaire as well also, look, yes, we are thinking of, but we have not concluded it fully because, look, there is always a possibility to make an alternative things and where we have a more ROI investment. So we always look for that one. Yes, we were in the mental mind making up certain things, but we are at the same time looking for the alternative thing where we can have more ROI. Okay. So we have not closed that chapter till now.
Okay, sure. Thank you. That's all from my side from now.
Thank you. The next question is from the line of Aman Singh, an individual investor. Please go ahead.
Hello, sir. Good afternoon. Congratulations on good results. So my question was that, so what led to the growth in the volumes? Like, was it from Middle East area or from any rest of the world?
Look, growth is also due to the overall buoyancy in economy, just to be honest enough. As well as we also, as we are all the time talking about the turnover and all this one. So yes, team has done a wonderful job. They are looking all the time to acquire the customer and increase the volume. That is there. But I can assure you definitely it is also the economy driven turnover. At the same time, as we can see that there is a reduction in the GST, there is a buoyancy in economy which increase our turnover. And as the tariff issue was there, as a result, the domestic also volume has increased because people are also now more focusing on the inward than the outward.
Okay, sir. And sir, one more question. So, like, how much increase in the cargo capacity in passenger aircrafts is the company expecting, given the increase in airports and the aircrafts?
Look, passenger aircraft, as we all know from the paper news and all this, there are two major airlines now, Air India and Indigo. And Akata also, there are three major domestic airlines, okay? Right now, roughly the capacity of the passenger aircraft, number of passenger aircraft around 700 to 800. That we are expecting it to double it to 1700. And that if that increase and number of airports from 140 to 220 airport increase, definitely that is the roadmap with us. And if that are increasing, and definitely we are present wherever the passenger aircraft with the are there, or the cargo airport with the cargo, first airport with cargo facility has to be there, and then the passenger aircraft has to be there. And if both are there, definitely, as we can see, the numbers are like almost double. We are also in the hopeful to be get definitely the significant pie of that number.
Okay, sir. Understood. That's all from my side. All the best for the future, sir.
Thank you. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Concall Agarwal, an individual investor. Please go ahead.
Hello, sir. Good morning. My question is not with respect to company, but with respect to the overall logistics environment and national logistics policy, which was intended to reduce the overall cost of the logistics for our company. Has the development happened on ground level towards the reduction? Because margins are not improving so much for almost all the companies.
Look, yes, government is not trying very hard, but since we are a very large country and we have it takes time to things that come on the ground. So it's taking a time, but as the roads are developing, as we can see in some of the places also where the roads have developed, cargo is moving from one channel to other channel also, because people are saying that the cargo can be moved, then why to do the costliest movement of cargo? So that type of things are happening. And what will happen, what my understanding is, that margin is the one thing, but overall if volume increase and overall the economy improve, then what will happen, margin will not be a criteria. Criteria will be the how much you can move the goods and all this one. Yes, there will be reasonable margin for everything will be there. But at the same time, nobody can expect and another thing, margin can improve. What I can tell you, apart from the national logistic policy, which always I speak about, it's still in the logistic industry, 30-35% cost is the oil, ATF, oil, petroleum, whatever name you can talk about. If that are not coming under GST, then definitely of that GST portion, it remains a significant cost for any logistic player, whether it's a aviation player or it's a road player. Because that's the first thing government has to bring the aviation fuel, petroleum under GST. Then one of the things what we are expecting can be achieved.
Understood, sir. So my second question is with respect to specific to Patel Integrated Logistics. If I need to invest for long term as a retail investor, I need to see the needle moving towards minimum 100 crore per quarter volume sale kind of thing. So when do we see this start happening?
The same question was from the previous speaker also. As I can tell you, including GST, already we are in that bracket, as you can see.
Okay.
So that's not that we are not in that bracket, only including the GST. My reading, I don't want to do any forecast, but my reading is it's a matter of time only. I don't think it's much challenge for that one only. We are a company which don't want to be also don't want for sake of turnover, we don't want to achieve the turnover. But anyway, it's a matter of, as you can see, the including the GST, the turnover is already there. So we are almost there.
Okay. Mm-hmm. Yeah. Understood. So we are focusing more on maintaining our profitability because it's a low margin business. Is my understanding correct?
One way it's maybe a low margin business, but it's a hard. It can be a ROI driven business as we are talking about. Low margin happen because the volume little bit. If volume increase and all this, because the overhead remain the same, no? Overhead cost will remain the same.
Okay.
So so automatically the EBITDA what we are talking about, we are also striving for increasing our EBITDA margin, and we are hopeful in the near future we will be able to increase our EBITDA margin as well.
So this means that when the volume increases, our economy of scale itself will come up.
Yeah. And look, if you think, one thing is that this is a business which it also depends, as we are knowing our economy is growing by 6.5% the minimum, our growing. So if that is growing, then the overall environment grow, and we are seeing the reduction in taxes and all this one, more movement of goods, then yes, EBITDA may be in the reasonable level, but overall profitability will improve.
Understood. And any discussion or contract that is happening with respect to bigger logistics companies where Patel Integrated can act as a vendor for those companies or as a partner for those companies to increase the volume?
Yeah, it's there, but unfortunately I cannot divulge. But we are just in the process. Very soon I will share the news with you.
So we can get some good news in respect to partnership with bigger companies in next 6 months or 1 year or.
Yeah.
That's great news. Yeah. Thanks a lot. Thank you for clarifying.
Yeah. Thank you.
Thank you. The next question is from the line of Jimmy Jail, an individual investor. Please go ahead.
Sir, just a follow-up. In our opening statements, you mentioned that we are getting back into the road segment. But the road segment, we were already there, which was a low EBITDA.
We were there. Yeah. Please continue. Please. Sorry, I interrupted.
Yeah.
Sorry.
So, what is the reason that we are getting back, and what was the reason that we left the road business earlier?
Look, 2019. Okay. 2019, we sold our division. Okay. At that time, the things were there different, and we were owning the big assets and all this. Now, things have looked very different now, and we will be continue to focus on air cargo as well as the road. What I'm telling, wherever the opportunity, and we are talking about ROI driven. Again, I'm talking about ROI driven, return on investment. If you are getting a significant customer or something like that, where the ROI will be better, so we don't want to lose that opportunity as well. But rest assured, we don't want to create a big assets and all this which is ROI not driven, which is reducing our ROI. We don't want to reduce our ROI.
Got it, sir. And sir, in that road business itself, so we will be catering through a truck business itself, right?
We will not be owning any truck. Just to clarify you, we want to be continue to be asset light company.
Okay. So how will we do that?
Sorry. Yeah, give me company, please.
So how will we do that in the road? So like being asset light in the road?
Because, look, now the models are there where we don't need to own any truck. We have to more add value in the supply chain by intangible way. But there are market lot of, because as you know, the Kangaroo brand and our brand is well known all over India. At any point of time, any truck is required available for us. Only we have to tie up the thing and all this one. So more like asset light, more like a woman driven, system driven, we want to approach that area now. Not like asset heavy company.
And it will cater to the businesses or the retailers mainly?
No. It will be only, as I'm agreeing with you, right now we will be, if things work out, and we will be talking about only the public limited and big companies only. So there's no issue of the receivables or anything like that.
Okay. And it will be carried out through a new subsidiary, right?
Yeah.
Okay, sir. Answers my question. Thank you.
Thank you. The next question is from the line of Harshil Shah from Phillip Capital. Please go ahead.
Sir, can you elaborate more on the impact of GST cuts on the volume, and what is the outlook in the coming months?
Look, yes, there was from the 22nd September, government has reduced the GST for the products and all this one. Yes, yes. So it was basically, as we can see, it is not for this quarter, last quarter, it will not be fully reflected. So it was only for 9 days. But we can see we will be able to more understand now the numbers. We are gathering numbers also for the October month and as well. So from there we will get a more filler, and the sense in the ground is there. Definitely the confidence in the people and consumer confidence has been increased. So volume is if consumer confidence is increased, then the consumption will increase, and this will, because we are also a significant player in the movement of the goods and all this through the air, like mobile phone, perishable goods, or anything paper, or anything what we can talk about. Things so auto parts are one of the things. So it will directly, indirectly add to our volume definitely.
Okay. I think 50 days have been passed, so we have a good idea about what has happened.
Yeah. By second quarter, I will be able to give. Third quarter, I will be able to give you more visibility about everything.
Okay, sir. And how is the competitive pressure and any working capital issues?
So luckily, just to give you first answer, we are a net debt-free company now. Okay.
Right.
So there is as you can see in our balance sheet also, that more than 20 crore is reflecting in the balance sheet. So there is no working capital issue as such. What was your first question? Was the competitive pressure? Okay.
Yes.
Competition pressure will be there. It's good for us, to be honest with you. We will love to have a competition because that gives us a more motivation and driven. At the same time, we are a company which is, as you know, 1959 old company, and in our area of operation, we carry a good brand, visibility and everything. So we are not undue bother about any competitive pressure as such. And just to give you more background, there was a Jet Airways was there, Kingfisher was there. They are the major, they are gone. Then also there's some apprehension was raised, how the things will manage. Then Indigo came, Air India is there, now Akasa is there, SpiceJet is there, and the Indian aviation sector is growing only.
Yeah, right. Okay, sir. Thank you. That answers my questions.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of the question and answer session. I would now like to hand the conference over to management for closing remarks.
Thank you from the bottom of our heart for taking out your valuable time for participating in this earnings conference call. Also, the people who have not asked the question but attended the call, thank you for them also. I hope we have been able to answer your question satisfactorily. If we are already a phone call away, so if you have any further question or would like to know more about the company, please reach out to our IR managers at Baloram Advisors. We will always be happy to answer all your clarification or any update about the company. Thank you once again for attending this call.
Thank you. On the behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.